Welcome. It's Mary Ellen McGonagle, and you are watching the MEM Edge show. This is the show where we put you in front of where the action is in the broader markets. And it certainly has been a very active week. We've seen volatility pick up a bit. So let's go ahead and jump right in. We have a lot that I want to cover with you today, so that basically I want to prepare you or help you get prepared for next week by reviewing what has occurred this week. So first thing on the agenda, of course, is we are going to take a look at the current markets. Again, we have seen quite a bit in the way of volatility, but you are going to want to have a good feel for whether the markets are in a period of healthiness or is caution warranted. So that's the first area. From there, we will go ahead and take a look at sector and group rotation. We're still seeing quite a bit of jostling going on, if you will, as far as defensive and even non-defensive sectors either getting hit or moving to the forefront. So we're going to cover that. Also using today's action in the markets. And here I talk about high probability trades for next week, but also as a guide, this is something that you can do at the end of each week to give you a sense, particularly given today's action. The markets were down for a good part of the day. So we're going to be taking a look at some of the stocks that were able to buck the downtrend, if you will, just as a point of reference and to get you thinking of other possible trades and areas in the markets. And then stocks that reported earnings this week. What I want to do is go ahead and review what we talked about in last week's show. And that is that when these very high profile stocks oftentimes report, you will see a ripple effect among other stocks that are impacted. Either they're in that same industry group or they stand to be impacted because they supply to that stock. Any given number of reasons, it's not always going to be negatively impacted. We're going to take a look at one stock that I talked about, actually two that I talked about last Friday because of their impactfulness, and they did not fail to deliver. So we're going to take a look at those stocks and the groups that they are a part of. So let's go ahead and get started. You can see we have a fair amount that I am looking forward to covering with you today. So this first stock chart that we are looking at is a daily view of the S&P 500. And as usual, what I've done is gone ahead and overlaid these simple moving averages. The green is your 10-day, red 50-day, blue is your 200-day simple moving average. And quite simply, they are smoothed out versions of the last, in this case, green, the last 10 days, 50 days, and so forth. What we want to pay attention to here, and really when you're looking at the markets, you want to get a sense of whether we are in a period of healthiness or not. Go ahead and take a look at prior uptrending periods. This is taking us from January into May. And for the most part, barring a couple of hiccups here, this is a daily price chart. We were in an uptrend, and the dynamics in that period were that the index was finding support at these upward trending, shorter term, simple moving average. And on top here, I have what is called an RSI. That's your relative strength indicator. And we had that RSI up above this dashed line. That's your net neutral during this uptrending period. On the bottom here, I have another momentum indicator known as the Stochastics. And generally speaking, again, despite we did have a little bit of a period in March, trade fear related, where it dipped, but for the most part, your Stochastics were also up above their dashed neutral in positive territory. So there's a view of a generally positive upward trending bullish phase in the market. So let's go ahead over, take a look at where we are currently. And we can see, given the angst in the broader markets, that we're seeing a little bit of a pushback here where the markets are dropping below that 10-day simple moving average. Now, we can see that we've been able to survive prior downdrafts, taking us back to that March period, beginning of April. But what we want to pay attention to here now is whether this S&P can find support at this 50-day simple moving average, this red line. This really is viewed as the line in the sand, if you will, primarily because in my work for many, many years, I've worked with institutions. I still have hedge funds and mutual funds that I work with. I'm pointing that out because this is a widely used metric for these big fund managers. So if their eyes are looking and paying attention to this and they view this as negative, selling may ensue. So it is something you want to pay attention to as well. Also, from my many years of work, I've found this to be really a very valuable metric as far as paying attention to any break below that 50-day simple moving average, and if it occurs on volume. So let's go again using history as our guide. We did actually have a correction during this May downdraft here. So I want to walk you through the characteristics of that correction. We did get that initial breakdown below that 10-day. Once the index broke below that 50-day simple moving average, it was in line with this RSI, also breaking below this net neutral. And the stochastics actually were already down below this net neutral, so in negative territory. So we did get a correction during that period. We also had what is called a death cross, and I wrote about this actually recently here in August, because it's only each and every time we've gotten what is called a death cross, that is your shorter term 10-day crossing down through the 10, the market has proceeded to decline further. So this is what occurred back here last fall. It occurred during this May corrective period, and then it also occurred during this lengthy chaotic period, for lack of a better word, during August. So we want to pay attention to that as well. If this shorter term 10-day breaks through the 50, I'd say definitely a caution flag is warranted. But for now, we are in good standing. The RSI did close today and break below that net neutral 50. So we're getting a little bit cautionary here. And the stochastics have also turned negative. So when we're looking at a daily price chart, this is going to determine your actions using shorter term horizons. Longer term, we are still in good standing. Let's see if I can go ahead and pull up a weekly and share that view with you, because some of you and many of you may be longer term in your trading, in your investment horizon. So I'm going to go ahead and pull up the stochastics so we can get that weekly view. The weekly view is primarily used by institutions because they do have a longer term view. They're not going to be trading in and out of the markets. So we can see the RSI on the weekly is still positive, and the stochastics are still in very good standing on that weekly chart. So near term, caution flags. Longer term, we are in good standing. And we're going to dig in because I know there's a lot of fear in the markets right now. The VIX spiked a bit today, but there is an awful lot that is still working. And I'm going to share that with you so you can potentially feel a little bit more ease with where the markets are right now, because there's a lot of headlines, a lot of shifting on a regular basis that can be a bit unnerving. So we'll take a drill down, take a better view of what actually really is going on beneath the surface. So this first view is something that I like to do each week, and that is take a look at the underlying sectors among the S&P 500. This is the 11 sectors. We're looking at the candle glance view. Gone ahead and added an RSI, that relative strength indicator overlay, and then sort these sector charts in descending order. So we're getting strength to weakness. So what we can see very quickly is similar to the end of last week, where these defensive areas are up here in the forefront, and that would be utilities, consumer staples, and real estate stocks. These are higher yielding. They do generally tend to perform better during chaotic periods of uncertainty, and we are in fact seeing that. But we are seeing some other interesting dynamics, and that is financial stocks. They're actually flat to up a bit for the week, and this is good. We want to see a move into these financials. A lot of this has everything to do with the yields historically being low. And that's a lot of the dynamic that is taking place in the market right now as far as driving the strength is this low interest rate environment. So we are going to dig into some of the groups that are benefiting and really holding up quite well despite a fairly volatile market. So let's go ahead over, and I want to do this candle glance view again. And if I didn't mention it, this is available from that first page in StockCharts.com. They do pre-populate it, but you can then go ahead and put in your own ticker symbols. Those, if you have a basket, a portfolio that you are or a watch list. So again, here's this RSI overlay descending, but within here, I have added the broader market indices, Nasdaq, Dow Industrials, Russell 2000, and then some of the more important. My work is centered mostly around high growth stocks with my MEM investment research and MEM Edge report, biweekly report. This is available to everyone out there. I urge you to take a look at it because I am on the prowl for that big outperformer. It's not always going to be in high growth. We've been picking up a number of these defensive stocks here over the last several months as well. But let's take a look because I like to see what the semiconductor area is doing. I talked about interest rates. That's going to be your yield on the 10-year. And so forth. We're going to dig in and take a look at some of these underlying industry groups that can really help you formulate your feel for the markets, whether it is a little too risky for you right now or with an eye toward potential rotation. So again, taking a look using that RSI descending, I'm going to update it. We're going to look at strength to weakness. Take a look, KRE. This is the regional bank index, and it's really sitting up here quite nicely. We're going to dig in, take a look at some of the names in there that are looking compelling, but also we can see that the VIX did have an upward move this week, and it's above 17. So for those of you not familiar, this is the Volatility Index. I'm going to go ahead and enlarge this because I want to, again, use history as your guide. We talked about May. That was a correction in the markets. The VIX at that point in time did get up as high as 24. This is that August, what I termed chaotic period. It spiked up into the mid-20s during that period as well. But for a lot of people, that 17 is an important area, 17, 18. If we get up above that, that's going to be concerning. That's an area where volatilities, and really it's called the fear index as well. So we did close the week above 17. This is another partial red flag that I would tell you because we generally like to see that VIX down into these lower areas. This is that nice June-July rally. The VIX stayed nice and stable and in that lower double-digit area. So that is something to bear in mind, put into your equation, if you will, as you're deciding on your actions going into next week. And so let's go ahead and keep carrying on here with this particular view. And there is one index that actually held up relatively well this week, and that is the Dow. It was down almost a half of a percentage point for the week. That is comparing to the S&P down 1%. But the big loser, if you will, this week was the Nasdaq down 2%. Technology stocks getting hit. A lot of headline news here. This is Trump talking about delisting Chinese stocks. Also the Hugh Wang, that's China's biggest tech company, talking about continuing to boycott working with them, U.S. companies. All of this has a negative impact on these high growth, faster moving technology stocks that are a part of the Nasdaq. So here we are, we've closed the week below that critical 50-day simple moving average that I talked to you about. RSI is further advanced below that 50. So not what you want to see. NASDAQ generally had been leading the markets going into this August period, certainly going into the May correction as well. And we did get a deeper sell-off this May correction was also trade war fear related, and tech generally is going to be one of the more sensitive areas. So not particularly great news that the Nasdaq has broken below that 50. So you do want to keep that in mind as well. Take a look here. Biotech stocks really getting crushed this week. This is, for me, important because a move into biotechs is really showing confidence in the broader markets. So we can see a pretty steep decline in the biotechs. One thing I will point out to you is we're going to, hopefully we have time, I want to share with you those names in the Dow that helped that support that index. It was only down 0.4%. And oftentimes during trade war fear periods, these industrials do have a tendency to get hit, but there were some definite bright spots that you will want to be aware of within the Dow, because from there we can then broaden out and look at some of the other stocks within those groups of those Dow stocks that are holding up. So that is something else that I want to cover. Now, let us go ahead, and I talked to you about two bellwether heavyweight names that reported earnings this week and how they impacted other names in their respective spaces. First stock is Nike. And Nike, of course, is very large. Let's see if I can enlarge this, make this chart a bit larger. So here we are looking at Nike. Take a look at that gap up on huge volume. They came out with numbers earlier this week, surprised brilliantly to the upside. And Nike, there was fears as far as trade war fears. They not only source some of their products from China, but also China is a big marketplace for them. And there was fear that there would be a boycott of U.S. goods. Q2, this is and a period when those trade war fears would impact them. And in fact, the numbers were explosive. 27% of their sales came from China. So I will tell you, this is a very bullish chart. And this gap up, big volume, the fact that it's retaining this uptrend, RSI, MACD, both in good standing, and it has everything to do with Nike's innovation. They're using apps technology. They are selling direct to their consumers, direct to consumer, a lot of product innovations, and they're selling their products at full price. So what does that mean to you? Let's take a quick second here with StockCharts.com, and we are going to just take a little detour here, go into the sector summary, and Nike is part of the consumer discretionary sector. Let's take a look at the weekly because it's a heavy weight. It is going to impact. So sure enough, footwear stocks overall. And this is what you're going to see. We've been doing this for several weeks now. FedEx was a big mover. Next week, we don't have any earnings season is drying up, if you will, but it is going to start regenerating again in several weeks. So it is worth noting. So let's go ahead and take a quick look at these footwear stocks and some of these names that were impacted, sorting it by that StockCharts technical rating. And I did want to share another stock that is an ADR that is in that space with Nike. Not as much in the way of volume activity, but it is setting up quite nicely. This is Adidas, ADDYY, and a footwear specialist gapped up actually after the earnings. They had some other news. The volume is quite significant. RSI, MACD are positive. Let's take a look at another stock that I mentioned last Friday's show to keep an eye on, because when they report, depending on the results, it is going to impact other stocks. This is Micron Technology, a semiconductor. Take a look, gap down 11%, huge volume, broke that 50-day. RSI is negative, so a very negative looking chart. But what I did want to mention and share with you again is the fact that we did see a significant downward move. The company actually came in ahead of estimates, but they guide it lower going forward. That's not what the market likes to hear. This is trade war fear related. Let's take a look at the Semiconductor Index, and we'll see just how impactful. And of course, there's other headline news that is impacting semiconductors as well, but we are seeing a general decline, and they were down 2%. That said, there are select semiconductor stocks that are bucking this downtrend here, and they are part of that MEM Edge report suggested holdings. I have 3 stocks on there that are really holding up quite well, and they have a whole different set of dynamics, supply demand related, that's holding them up. So again, urge you to take a look at that MEM Edge report. You can go to my website, MEM Investment Research, and trial it out for 4 weeks. But that is the earnings, and I wanted to share that with you because going into earnings season in a few weeks, we are going to continue to focus on those names that are very impactful, because you can see that trickle down effect that takes place when these bigger cap names report. So let's now move on. I talked to you about the Dow Jones Industrial Average, the fact that that index was, of the 3, a relative outperformer. And let's go ahead and just take a quick look at that index, and you can see if I can. Yep, this is the Dow Jones Industrial Average. So it's broken down, but it is holding in relatively well. That RSI is still positive. So when you drill down, and I've done the work for you already, we're going to take a look at, there are 3 top or heaviest weighting stocks, and all 3 of them were up for the week. The first one is Boeing. This is the heaviest weighting among the Dow Jones 30 Dow Jones Industrials 30 stocks. So let's take a look at Boeing. It really was able to recover from those horrific news stories as far as their the crash and the subsequent boycotting of purchasing of their airplanes. But we can see the stock is very much in a confirmed uptrend. It's up about 1% for the week, finding support at this upward trending 10-day simple moving average. Your RSI and your MACD are positive. So I'm not going to take the time just now. I'm going to share with you the second heaviest weighted stock. And from here, we are going to use this information to then look at other stocks within the group, because these bigger names, they're not going to trade in a vacuum. Oftentimes, you will find the dynamic is spreading throughout the industry group. So here's a look at Home Depot. Take a look. This stock is up 2.3% for the week. RSI is positive. MACD is also positive. The stock dipped a little here last week, but it is bullishly breaking back above that 10-day simple moving average this week. And then one other name that we can take a look at, I actually hopefully will get to some of the other performers, but we will certainly have to look at McDonald's, not as bullish looking, but the stock is up 1.8%. They announced that they are going to be introducing a plant-based burger. So the stock is trying to reverse this bit of a downtrend here. A break above that 50-day combined with a break above 50 on RSI and a MACD above 0 would be certainly more bullish, but it is worth noting. So now let's take that information as far as those top heavyweight names among the Dow and go ahead back. Let me just go over to here, sector summary. And we are going to take a look at other names within those various groupings so that we can see, are there other candidates, other areas? Because Boeing looks interesting. What we want to do from here is Boeing is part of that aerospace defense. So we can go ahead and look and see that, in fact, it was the second best performer. But there are other names that are also performing well this week. So this StockCharts technical rating is certainly one way that you can get your arms around. Let's take a look at CAE, bit of a smaller company, but we can see it is not quite bullish. It is still trading below that 50-day simple moving average. So we're not doing particularly well there, but I will draw your eye to another aerospace defense. This is Teledyne, TDY. The stock is up this week. And again, another name that is finding support. Now, I will say it has had a very lengthy run, but when you see a stock that during this August period, it was able to withstand the downward pressure in the market, that is a clear-cut sign of strength. Stock is poised to hit a new high. So that's a very bullish look there. Let's go ahead and take a look. I talked to you about Home Depot. So from there, we want to then go ahead into the sector that Home Depot is a part of, consumer discretionary. And we are going to, from here, look at home improvement retailers and see if there are any other candidates among these names. And certainly one of the names that we can look at is FND, a little bit smaller, but this has everything to do with low interest rates, housing starts improving. A lot of these home improvement names are really, some of them are doing quite well. So we can see it's finding support at that upward trending 10-day simple moving average. I'll share with you another potential candidate also on the smaller cap side, but certainly worth noting, BXC, Blue Lynx Holdings. Take a look at that uptrend. It really is, again, a stock during that August period that just bucked that downtrend, came out with good numbers, pulled back a little, but is now reversing that short-term downtrend. And then McDonald's. And we can then go ahead back into consumer discretionary, that area that we were in. And this particular area, of course, is going to be restaurants and bars. And we can again see that there are some other stocks within this area that are actually doing okay among the restaurant. It's been a little bit of a tougher period. The Shake Shack down quite a bit this week. This is what's happening. Those high momentum stocks are getting hit the hardest. But I would tell you, we can take a quick look at Chipotle. It is fairly flat for the week, but finding support at an upward trending 50-day simple moving average. Your RSI is positive, as is your MACD. So hopefully you can see how this exercise can really be quite helpful as far as pointing you toward potential areas of strength within the markets. And then from there, take a look at some of the other names that could also be potential candidates and for your work. Now, I talked about using the market movers, and really this can be an exercise for any day. But today, again, I talked about the markets being down for the day. We did get a nice attempt at reversal, but not quite. But what we want to do from here is go ahead and look at your top 10 percentage that were up. These are names that, again, were up despite a difficult market among that S&P. We can then take a look at a candle glance view, and not every stock is going to be a potential candidate, but there are a couple of names that catch my eye, and certainly Wells Fargo gapped up. They did announce a new CEO today, and certainly we can take a look at some of the bank stocks among there, and then Host Hotels is another one, pulled back. It could be interesting here. So from here, I'm trying to keep an eye on this clock, but we can certainly take a look at Wells Fargo and then some of the other banking stocks. So we're not quite going to have time. I would urge you to go into StockCharts.com, into their sector summary, and then from there you can then drill down and take a look at some of these bank stocks. And I think we might have just a little bit of time here, because that KRE, this is regional banking stocks, were actually looking quite attractive. We can go into that bank sector, and then from here, pardon me, we can see at the forefront, a lot of these are foreign banks that are doing quite well. I'm going to sort it by that StockCharts technical rating again. And ideally, what we want to be on the prowl for are those U.S. banks that are a bit larger, more liquid. I would say STI up here. We can take a look at SunTrust. That is a larger cap name. It really has been doing quite well, broke out of this nice base, pulled back to that 10-day simple moving average, and is poised to break out again with positive metrics. So I'm going to leave it at that. For those of you trading, happy trading.